Hello my young friends. As we had discussed in our earlier videos last week, we will be sharing with you 5 multiple choice questions in every video so that it enables you to prepare for the NISM 5A exam and come out with flying colors in the very first attempt itself. So as we had discussed, the first chapter is about the investment landscape. So let's look at one of the first questions. The financial goals should have, there are 4 choices. A, time horizon. B, money required. C, both A and B, and D, none of the above. And the correct answer is C. So after identifying and assigning priorities to the goals, the investor has to assign a timeline as well as the amount of funding required at the time of such events. Therefore, answer C, which means time horizon as well as the money required. Both are important financial goals. Coming to the second question, investors tend to extrapolate the current events into the future and expect a repeat. This example is called A, herd mentality, B, familiarity, C, recency, and D, overconfidence. The correct answer is C, recency bias. In recency bias, the investors tend to extrapolate the event into the future and expect a repeat. A bear market or a financial crisis leads people to prefer safer assets like gold and silver and real estate. Similarly, a bull market makes people allocate more than what is advised in the risky assets like equity. Now we come to the third question. If the asset allocation is maintained at a constant 75% to 25% ratio, it is called first A, dynamic asset allocation, B, fixed asset allocation, C, variable asset allocation, and D, strategic asset allocation. The correct answer is B, fixed asset allocation. So in a fixed asset allocation strategy, the portfolio is rebalanced on a regular interval to maintain the original asset allocation which was decided at the initial stage. Now we come to the fourth question. The purchasing power of currency changes on account of which of the following? A, asset allocation, B, compound interest, C, inflation, and D, diversification. So the correct answer is C. Due to inflation, to buy the same amount of goods every year, we have to spend more and more money. Thus, it reduces the purchasing power of money. So the correct answer is inflation. Next we come to question number 5. Inflation risk is also referred to as credit risk, liquidity risk, purchasing power risk, and none of the above. The correct answer is C, price power risk. So as we had discussed earlier, inflation or price inflation is the general rise in the prices of various commodities, products, and services that we consume. So inflation erodes the purchasing power of the money. Inflation risk is also referred to as the purchasing power risk. Is the risk that inflation will undermine the real value of cash flows made from an investment. So with this we come to an end to the 5 MCQs from chapter 1. So we look forward to you keep preparing for this exam. Study the NISM workbook which is provided to you at time of registration for this exam and be ready with it for coming out with flying colors in the first attempt itself. For more updates, do subscribe to our channel and keep posted about the latest updates in the industry. Thank you.